Good evening, everybody. On behalf of the SIRC, we present before you the panel discussion on this vote on account of the interim budget 2019. I extend a very warm welcome to the Honorable former President of ICAI, Bupathy sir, who has very kind enough to come forward to address our CF fraternity, and also I request Kamavati Madam, Regional Council Member, for a formal welcome address. Thank you.
Dear members, welcome you all for this panel discussion. As citizens of India, we are trained to face the unforeseen events happening around us. Today morning, we were delighted to see Piyush Goyal, Chartered Accountant, the interim Finance Minister, was giving a wonderful speech on budget. We were delighted to see. Today evening also, we are delighted to hear the speeches of Bupathy sir, past president, my guru, and Vaitheeswaran sir on indirect tax and indirect tax. One good event sir spoken, unforeseen event I said. Today the AC is not working. Please bear with us. Your cooperation is needed. I think the climate is okay. Today, not very bad. Please bear with us. Thank you for your cooperation. With this small note, I am proud to introduce my guru, Bupathy sir. Doesn't require, but wherever it's needed, I will cut short. With the permission of my guru. C.A.R. Bupathy had his schooling in Hindu High School Triplicate in Chennai, completed his commerce graduation from Vivekananda College, Chennai, and a fellow member of the Institute of Chartered Accountants of India. He is a founder partner of Chartered Accountant firm, a renowned Chartered Accountant firm, established in 1976, an India-based public accounting firm which is into audit, taxation, consultancy. The firm has a registered new network in Dubai in the name of SPA Auditing and Affiliates, is ISO certified. He served as a resource person in taxation in ICAI, LIBA, and other professional institutions in South India for more than 3 decades. He is also served as a chairman of International Fiscal Association, India branch Southern Region for the term 2006 to 8. He served as a member of Central Council of ICAI for a period of 9 years and occupied the position of President of ICAI for the year 2003 and 4. He was also a member of Education Committee of International Federation of Accountants, an apex body for accountants worldwide for the term 2003 to 6. He is a director, chairman of Audit Committee of Geojit Financial Services Limited, Jubilant Industries Limited, and Jubilant Agri Products Limited, director of Geojit Technologies Private Limited and Geojit Credits Private Limited. Recipient of the following awards for his singular contribution to the accounting profession: Paramacharya Award, Certification Award given by Confederation of Asia Pacific Accountants. The important positions he has held: President, the Institute of Chartered Accountants of India 2003 and 4, Education Committee of International Federation of Accountants, an apex body for accountants worldwide for the term 2003 to 6, Central Body of Advisory Committee CBDT, Board Member Insurance Regulatory Authority of India, Study Group constituted by World Bank for the study of corporate governance in India, National Accounting Standards Committee of Department of Company Affairs, NACAS, and Accounting Standard Board of SEBI. With this, I welcome our past President, Bupathy sir.
Regional Council Member Hemavati, chartered accountants and students. I am very happy, glad and proud to accept this invitation from the Southern India Regional Council to share my ideas and thoughts on the Union Budget 2019. You can call it Union Budget, we can call it Interim Budget, you can call different names for it. But it is christened as Finance Bill 2019. As Hemavati mentioned, it is a very proud moment for all of us in this hall without any exception, because it is the first time in the history of our country a chartered accountant is presenting. And on the same day, I have been asked to give my views on the Finance Bill 2019. Many of you would have watched the Finance Minister presenting the bill this morning on TV. If you want to get a gist of what he said, I could divide his presentation into three distinct parts, very clear parts. The first one is the state of the economy, what our India is today, and specifically highlighted what happened in the past 5 years during this particular regime. The second part is a vision for the next decade. He bifurcated that into two parts, first 5 years and next 5 years. And what are the 10 dimensions which are required to achieve that? This is the second part. And the third, relatively small part, with which all of us were eagerly expecting, is the tax proposals, or not many tax proposals, for good reasons. Because it is the budget immediately preceding the elections, no structural reforms could be made. Therefore, he has touched upon some of the important points connected to middle class people. Rightly so. So these are the three distinct parts. The Finance Minister, as a chartered accountant, had a difficult assignment to him because he took charge as a Finance Minister only recently, and within that short span of time he had to gather all the facts and present the budget. So this was a very difficult task for him. If it had been a difficult task for him, it's equally difficult assignment for me, because what he took 2 hours and 20 minutes to tell, I have to compress it within 30 minutes. So that is going to be a difficult assignment for me. So the first stage, I would like to say, the first he mentioned about the state of the economy is the GDP rate. Many of you would have watched the debate on TV before the presentation of the budget. And if you see, the GDP rate has been changing from time to time. So somebody in the debate asked the question, how can you change the GDP rate so frequently? That is not an appropriate thing. And in the debate, one economist came on record and said, it is usual thing to change the GDP because there is something known as advanced GDP rate, revised GDP rate, and then the final GDP rates. This was the discussion. So there was some confusion as what could be a GDP rate. And that is why I request each one of you to read para 6 of the Finance Minister's speech. Para 6 of the Finance Minister's speech nowhere says about the GDP rate at all. Not a mention about the GDP rate, but very nicely couched in beautiful words. It says that it is the highest rate since 1991. So since 1991, today's GDP rate is the highest. What is the GDP rate in that paragraph is not mentioned. Rightly, nothing wrong in that. A nice way of putting across. The second thing is regarding the inflation. Now, when you do comparisons, one way of doing a comparison is take a base year and compare it to this. But if you take the different parameters which has been considered by him, one is the GDP rate, second is the inflation. It's not that, welcome Vaitheeswaran, the other speaker on identity. When you identify the inflation rate, the comparison is not made prior from 1991 to now, but the comparison is made between 2009-14, between the earlier regime and this, and it is not the inflation rate for a particular year. The inflation rate in 2009-14 was 10.1%, and the inflation rate today, not today, for this period, for this average for this period is 4.6%. So the comparison of the inflation rate is not made on a year-to-year basis. It is made on an average rate for the preceding 5 years and the current 5 years. In that way, the inflation rate has come down, is very much under control. Now, when you come to the fiscal deficit, he says 6% of GDP 7 years ago. So the comparison is not on a like-to-like basis, it's on a different things where the figures could be presented in a better manner and in a more acceptable manner. Similarly, the current account deficit rate also is mentioned. It is difficult for me to go through all that he has said in the state of the economy, but I am cherry-picking some of these points and I am trying to clarify it for you. Like that, I have said about GDP, I mentioned about inflation, I touched upon fiscal deficit, and then the foreign direct investment. Last 5 years. When you talk about fiscal deficit, he said 6-7 years. When it comes to foreign direct investment, the preceding 5 years he compares, and the last 5 years, $239 billion have come to India as a foreign direct investment. These are things on the current. The next one is structural changes which have been formed, which has been done during the last 5 years. The major thing which he touched upon is GST and the IBC. By introduction of GST, the tax base has widened, the tax compliance has improved, the tax collection has increased. So these things, the state of the economy today, which he has highlighted. But what remains to be seen is that the follow-up action arising out of this should be taken to its logical conclusion. Similarly, on the corruption front, he mentioned RERA, Real Estate Regulation Act, and the Benami Transaction Act, because of which so much of assets they were able to, confiscate or take possession of. But what remains to be seen, how they are going to monetize those assets and whether they will be able to use those assets. These things he has mentioned, and one of the most important things which he has really touched upon, and he rightly touched upon at this part of the year, in the month of February, when you know an important thing is going to happen in 2019, he touched upon what is the status of the poor and the backward class people. The first thing he has mentioned is for education. For education, 10% reservation for the poor and backward class people. Then he talked about construction of rural roads. For the poor and the backward class people, we need roads. And it make a mention in the finance minister's speech that earlier they were trekking to go to school, now they are commuting by a bus. That means the facilities have been provided to them. He also said the rural cities or the rural places should be provided with electricity, and that has taken care of. Health care is important for all the poor people. And he mentioned 21 All India Institute of Medical Sciences have been established in India, and out of which 14 of them, out of 21, 14 of them have been introduced or made operational from 14 on, from the time this government took charge. So he highlighted all these things. And one more thing about the farmers, he said, if the area held by a farmer is less than 2 acres, if he holds a land of less than 2 acres, 2 hectares, then there will be an income support given to him to the extent of 6,000 rupees in 3 installments of 2,000 rupees each, and the first installment will be paid before March 2019. And for the next 2 installments, adequate provision has been made in the budget. This is what he has said. So to give them some income, you could have roads, you could give education, but if they don't have income, what is to be done? So some sort of monetary support was also. One more thing regarding the farmers is, if there is a natural calamity, a flood, a typhoon, a cyclone, a tsunami, and these peoples get affected by it, they get an interest subvention of 2%. Whatever is the interest rate, they reduce 2% and pay that on the loans. That was available to them only for a period of 1 year from the from the date in which the event occurred, during the rehabilitation time. But he has extended it not one year for the entire scheme to which it is revived. It may take 2 years, it can take 3 years, the interest subvention continue. Great. He has really taken care of them. And also he said that in case people promptly prepay the loan, there will be a further reduction of 3% interest. So it is a sort of an incentive, carrot and stick. The incentive, if you repay promptly, a further concession in interest to the extent of 3%. Pension for the workers, to provide an uplift for the dignity of the labor and working class. You contribute 55 rupees per annum, per month, per annum, from the age of 18, post-retirement, 60, for the rest of your life, you will be given 3,000 per month. A sort of a, post-retirement is something everyone of us have to take care. Because of the advancement in medical science, the number of years we live post-retirement is equivalent or more than the period pre-retirement. Hope you get my sentence now. So, if that is the case, you have to provide adequate income for it. You contribute 55 rupees per annum, and you get 3,000 rupees per month after 60 years for the rest of your life. And if you are above 29 years, you have to contribute 100 rupees per annum. So these are some of the things, and the crucial one which all of us are connected is simplification of the direct tax systems. No more visiting income tax offices. I was participating in the Global Investors Meet. It was a session on fintech. One of the speakers made a statement, still ringing in my ears, a beautiful statement. He said, in our country today, we want banking, but we don't want bank. Right? There are banks which levy a penalty if you go to the bank. They want you to do everything at your place. That is the development which is taking place. And that development is now moving to the income tax department. I will tell more about it when I conclude my direct taxes proposals. Whatever he has said, I will narrate it. This completes my first part. What is the state of economy? Some of the crucial things which he mentioned, I took it and highlighted for you. I have not covered the entire thing as far as the first one. Second part is a vision for the next decade. He says, our country, something great, and we all should be happy. As she said, we are excited, more excited after listening to him. Our country can march towards a $5 trillion economy within the next 5 years. $5 trillion economy. Some of us will find it difficult to put the number of zeros. So if that is the case, within 5 years, and to a 10 trillion within the next 8 years. So 5 plus 8, 13 years he has planned it. And he said, we could do this, we could achieve this. And if you want to achieve this, what should we do? How should we plan? What are the efforts to be taken from our side? That he has captured, and he has said, he used the word dimensions. He used the exact word which I am repeating, is dimension. 10 dimensions, he said. The first one, which all of us will agree, is infrastructure. If you want to grow at that pace, if you don't have the infrastructure, we cannot grow. So he has said that he has given sufficient allocation for that. Digital. So 10 years back, 20 years ago, if you travel in a train, you will not have a socket to plug in. Today, each compartment has got 10 sockets because you have to charge your mobiles. So it is not only train, everywhere with the digitalization coming, you have to get equipped for it. You have to have the necessary background and infrastructure for it. So people are trying for that. So you have to do that. A pollution-free country. To go to Delhi, people are afraid. They are worried whether they are breathing air or something else. So the emphasis for solar power, the emphasis for energy saving equipments, the emphasis for electric cars. You must see in the United States of America, many of the Tesla car uses purely electrical. And to use that car, if you charge the battery once, you could drive it only for 250 kilometers or 250 miles, or now they've increased it to 400 miles. So they should have charging stations in all places. These type of things we should visualize and start providing for all these things. If you develop and if it is completely polluted, none of us would like to stay here. So with the result, so if you want to reach that $5 trillion or $10 trillion, then you have to have a pollution-free city, pollution-free country, and therefore pollution control must be there. Rural industrialization, rivers and water bodies, clean drinking water, coastal line, food self-sufficiency, okay? Health insurance, as I told you, medical is becoming very expensive, and if you want an ordinary person to survive, unless he is adequately covered by insurance, it will be difficult for him to survive. Therefore, the concept of group insurance, he has introduced a scheme. And finally, he did mention, like, anything cannot be achieved, and rightly so. And you all of us should follow this principle. We cannot achieve all these things without a team. So he recognized his own employees and said, without them we cannot achieve all these things. So our employees, we must build up a team, recognize their efforts and take care of them also. If all these 10 dimensions are taken care of, we could achieve that $5 trillion and $10 trillion. Okay? See, the infrastructure which we planned for the institute is not adequate.
On budget evening.
Pardon?
On budget evening.
On budget, but oh, I was temporarily happy. Why you deprive me of happiness? So it's a pleasant thing to see a household thing, but still, when we see people standing, definitely it's a little bit of a disturbance. Anyhow, now we'll come to the third stage, the tax proposals. The first thing, I will combine two aspects together, and I'm sure you'll permit me to combine. The first one, no change in tax rates. Good things first. And the way he has put it, if anybody wants to object out also is very difficult. Because he has said, I want to take care of the middle class people. I am not bringing structural reforms. I want to take care of the middle class people, and this cannot wait till the elections. And he has suggested something which benefits the middle class. If anybody wants to object, they will go against the middle class people. It is somebody making a statement. One person was looking at the other person, asked him a question. Have you, say yes or no to my question. This was his. Say yes or no to me. Have you stopped drinking and beating your wife? Say yes or no. So, if he says yes, he confirms that he was beating. If he says no, he is continuing to do it. So, that way, this question has been put in such a manner. I want to recognize the middle class people. I know their difficulties. I know their concerns. So I am trying to give some relief measures to them. This cannot wait till any particular event, and hence I want to go through it. And he has given certain things. Then he said, the taxable basic exemption limit will be the same. But people who have income only up to 5 lakhs rupees, under 87A of the Income Tax Act, they will get a rebate. They need not pay tax. But the threshold limit continues to be the same of 2,50,000. Why? Because in the earlier paragraph of his finance speech, he said the number of taxpayers have gone up. If he increases the threshold limit from 2.5 lakhs to 3 lakhs, and these people will start filing return, the number of people filing the return will drop, and we will lose the status of a developing country. One of the index to find out whether our country is a developing country or not is the number of people filing returns. So he kept that, and you have to file a return, but up to 5 lakhs rupees you need not pay income tax. So this is one thing which is. At the same time, he recognized the senior people, the middle class people. They get interest on bank deposits, they get rental income. And these people, when there is a tax deduction at source and the interest exceeds 10,000, today 10,000 is such a small amount, 10,000 rupees they deduct tax at source, these people have to wait for a relatively long period and get the refund. This is hardship. This is extreme difficulty. Therefore, he increased the threshold limit under 194A of the Income Tax Act from 5,000 rupees to 10,000 rupees to 40,000 rupees. So up to 40,000 rupees interest, there will not be any TDS whether on the interest paid to any person. Similarly, on the rent. If the rent earlier exceeds 1,80,000 rupees per annum, then TDS will apply. But that limit has been increased from 1,80,000 to 2,40,000. These are all good amendments, nothing to complain. It helps that class of people, so we will accept it as it is. But only point to a technical audience I will raise. Same thing if I am talking to businessmen, I will not raise this point. But since it's a professional audience, chartered accountants are sitting here, I will raise this point. If a person is going to have a long-term capital gain of 3 lakhs rupees, and other income of 1,90,000 rupees. So total put together, 3 plus 190 is less than 5 lakhs, 490. But should he have to pay tax now? Because there, if the long term, you can take the threshold limit up to 2,50,000 only, because the threshold limit has not been increased. There, even if the income is less than 5 lakhs rupees, if his breakup of income is long-term capital gain and other income, or short-term capital gain which is subject to tax on 111A of the Income Tax Act. Both the cases, even if the income exceeds 2,50,000 but less than 5 lakhs, he may be asked to pay tax. That is a matter of information which I want to share with you. It may strike some of you, it may not strike, therefore I am trying to highlight it. The standard deduction, simple, from 40,000, the limit has been increased to 50,000. But the great thing is, it's also applicable to pensioners, because pension income also is chargeable to tax on their salaries. They will also get the same higher standard deduction, limit of 50,000. One small thing, while he has taken care of the salaried class of people, those people who are receiving family pension, the relatives of the employees, they are receiving family pension. When the relatives of the employees receive family pension, that income is not chargeable tax on their salaries. That income is chargeable tax on other sources. And there, the deduction still under 57 of the Income Tax Act continues to be 1/3 of the income or 15,000, whichever is less. So when he has taken care of the salaried pension class of people, why not the relatives of the employees? Possibly it was missed out. If somebody points out, they may accept it and do it also. But this is a point which I am trying to bring to your notice. Then the notional rent. If you have one house property which is self-occupied, notional rent is 0. If you have more than one, the others will be deemed to be let out and notional rent will be charged to tax. This is the present law. But he has given a concession that one more residential house, even if you say it is, and he has given a sort of experience of his. If you go to Bombay, people have 2 houses because of their occupations. They have to stay in one place. The other place is vacant. So you cannot ask them to pay tax on notional rent. All these explanations he has given, and then he said another house also will be taken as the income will be taken as nil. So the notional rent will not be taken for the second property, which he has clearly clarified, and the interest on the self-occupied property. You could claim a deduction on the interest on housing loan subject to a maximum of 1,50,000. I am sure those of you who have not listened to the speech, or those of you who have not read these clauses in detail, either this 1,50,000 is for each house or for both houses together. It's very clearly clarified, it's both houses together, but the 1,50,000 limit has been increased to 2 lakh rupees. So that's the point which you have to remember. Coming to section 54 of the Income Tax Act, if you sell a residential house and invest in another residential house, you are entitled for the capital gain exemption. There were some confusion about it, judicial pronouncements saying that singular includes plural, one includes multiple, all these things were there. Then the act was amended, only one residential house. But today, he has recognized that you could, at your option, the second house also, the cost of the second house will also qualify for exemption under 54 if you want it. You must exercise the choice. If you say I don't want it, it's your choice. So at your choice, you could claim the second house also. The condition here is the long term. This is where it dilutes the importance of the amendment. The capital gain, long term capital gain should not exceed 2 crores. The long term capital gain is less than up to 2 crores, you can get these benefits. The next house also will qualify, the second house also will qualify. But if you have a long-term capital gain of 2 crore, of course sale price can be more, so you could invest in more than one house and claim the exemption. But what is yet to be clarified, or there could be some litigation in this area, is that you are all aware that once the exemption of 54 is claimed, the investment in the new house which is purchased or constructed, should not be sold or transferred for a period of 3 years. There's a lock-in period of 3 years. 3 years you should not dabble with it, you should not sell it. Now, when I am selling one house, I get a long-term capital gain. I invest in multiple houses, 2 houses. I invest in 2 houses. Should I exhaust the capital gain in respect of the first house and then go to the second house, or I could take it according to my convenience? This is an area, possibly there could be some dispute. And what is the benefit in taking it some method other than exhausting the first house? Because in case you are going to sell any one of these houses within 3 years, the provision states, while computing the capital gain in respect of the new house, the cost of the new house shall be reduced by the amount of capital gains exempted. So the cost gets exempted. So if the entire capital gain is adjusted towards the investment in that house, then there could be some extra tax you may have to pay. But this could be marginal. It's not a big issue for us to really contest. 80 IBA, affordable housing, the reduction has been extended by 1 more year. 1 more year, up to 2020, it has been extended to 2020 it's been extended. So you can get the benefit. Then real estate, I had this experience. A friend of mine purchased a flat in a multi-storied complex where there are about 200 flats. And he was very happy. He told me, I'm going to have the Garab Prasam, and he went there, he stayed there, and I met him after about 6 months. Then I asked him, how is your new flat? How are you enjoying your stay there? He said, I vacated the flat. Now, what is your problem? Why did you vacate the flat within 6 months' time? And he said, there are 200 flats there, only 6 occupants were there. So in a complex where 200 flats are there, and only 6 people are going to occupy, how it will be like a bungalow which you see in Kanchana 2. So if that is the case, so that's the real problem. He said, okay. So the builders having unsold flats in this fashion, those unsold flats, the notional rental income, there's a stock in trade for them. The rental income from notional rental income is not charged to tax. Earlier, it was not charged to tax for 1 year from the date of getting the completion certificate. Now it's been extended to 2 years. So it is sort of understanding the difficulty of a real estate promoter and considering his request. So this is the amendment. Then we come to the mode of assessment, electronic mode of, he was very happy, thrilled that 98% or 97% of the returns are being filed electronically. No, nothing is manual, and going forward even the assessments will be electronic mode. Something faceless office, that means we want the assessment but we don't want the income tax office. So that type of situation is emerging, and if it is emerging in that fashion, what message is there for the profession? This session we should highlight that. We should emphasize on that. What is that? All of us who are in practice should think in this direction and see within the next 3 years the office of each one of us is adequately equipped to meet this challenging situation. There should be a total transformation in the office. If we still have the old thing, and when you are to, do everything electronically, you will find it extremely difficult. So now it's a time, just like he said, 10 dimensions for our economy to reach a 5 trillion mark. For our profession, what are the dimensions required for our profession now? It is immediate thing for us. So first, equip the office. You need a good system, robust system. You need sufficient people to have the knowledge to deal with this. So all these things now itself start gearing up. So then only you will be able to meet. Second thing, first is the systems and everything should be in place. Second thing is very important, very crucial, is your documentation and the safety of the documentation. you collect the documents from your clients in support of each of the exemptions which you are claiming, in support of the each and expenses which you are claiming. You have it in electronic mode. You have it in hard copy. The assessment may come up after 1 year or 2 years. Now if it comes up, you have to scan these documents and send it. So you should have it ready, and those documents which you collect should be a speaking document, at least in person. When you go and look at his reactions, if you feel that he is not convinced, you try to explain to him in 2-3 ways and convince him. There are different ways of convincing. I am talking about. So you convince him. When you convince him by this method, but today you are not going to be given that opportunity. You are very rare cases you will get that opportunity. So your documents which you are going to scan and send should speak for the deductions and exemptions which you claim. So that is going to be very important. So 2 things: see that you have sufficient infrastructure, and see that the documentation which you collect from your client. Many times people will say, I have it with me, I will send it afterwards. You know, they will say, and after the deadline is over, we will also forget. And when the assessing officer sends a notice, we will search the files, it will not be there. We write a letter to there, he will say, I am in New York, I will come after 10 days and give. So that could be a problem. So why I am saying is, your documentation process should be very simple. So these are the amendments in the direct taxes. If you ask me, the first budget presented by a chartered accountant, I am not a related party here. Okay? First let me clarify that. But if you ask me, homework well done. The homework has been done in a very nice manner and presented very efficiently. Very efficiently. And normally, in all these budget discussions, particularly on the TV channels, when we conclude, the anchor will ask us a question. You have clarified so many things. If you want to rate this budget on a scale of 10, what is the mark you would like to give for this budget? So, even if none of you have asked this question, I will self-impose this question on myself, and I give my view, gathering the expertise from the finance minister. Instead of telling a number, I will say my classification of this budget presentation is near to 10. I leave it thus to you. Thank you.
Even he thanked the taxpayers this time.
Yes, thank you, sir. Yes, sir.
Thank you so much, sir. As a rule of chartered accountants profession, as a family, we should come here, join here, and hear the budget speeches of the eminent speaker. That is the rule of the chartered accountants profession. We have all joined as a family here. Delighted to see you. Delighted to hear the professionals' meticulous way of preparation and delivering of the speech. Thank you so much, sir. Thank you so much.
We drank water in a glass and
And the next speaker, Vaitheeswaran sir. Wonderful speaker, eminent speaker, whatever way if you want you can call, you can say, is here to speak about the indirect tax. Is it, sir? Or budget. So I am proud to introduce him. Mr. K. Vaitheeswaran obtained a law degree from the Madras Law College and enrolled as an advocate in 1990. He also has obtained graduate in CWA from the Institute of Cost and Works Accountant of India and has completed ACS from Institute of Company Secretary of India. He has over 28 years of experience in advisory committees as well as thorough appearance before appellate authorities, tribunals, courts in the matter arising from income tax law, excise, customs, service tax, VAT, CST, FEMA and company law. He advises clients across the country on various verticals such as manufacturing sector, retail, healthcare, hospitality, media, entertainment, information technology, education, logistic, infrastructure, real estate, shipping and aviation, travel and leisure, banking and financial service. Read it. He also advises various associations.
GST department.
GST department. He has the control over that. And Chamber of Commerce. He is a domain expert on VAT and wrote the first comprehensive book on the subject, VAT in India, in 2005. He is the most sought after speaker on VAT, service tax, excise and customs and GST across the country and has addressed hundreds of seminars on the said topic. He is considered as a specialist in tax matters with in-depth knowledge of the subject and the impact of tax on various business models. He is currently the chairman of Expert Committee on GST, Madras Chamber of Commerce and Industry. He is a member of Finance and Taxation Committee, CII Southern Region, member of the General Committee, MCCI. Only one line is there, so. He has authored books on Central Credit, books for students appearing in the CA final examination, and is a recipient of Vocational Excellence Award from the Rotary Club of Madras Southwest. This I welcome.
Good evening. It's a pleasure to be here every year, year on year. The call comes, message comes, WhatsApp comes, and some way we immediately say yes because there is a kind of a bond to come speak on the budget. And my experience have always been interesting here. There have been scenarios where there are about 220 amendments, and we try to do justice to 220 amendments. And there are scenarios where there are no amendments, where you also have to try to do some justice since you've been called to speak. I think I would go with Mr. Bupathy when he says that presentation matters. Today we live in a world where packaging is so critical. While content is fantastic, Mr. Jetli's budgets were equally good. His content was pretty good. But the way of delivery also matters in so many ways. And there is an art of pausing. It's a very skill. It's a good skill which speakers develop. So I think this finance minister has got that skill in abundance. He knows exactly where to pause. He knows exactly where to allow people to make noise and then come back. He knows when to switch over to Hindi, which topic should be spoken in Hindi, which topic should be spoken in English. World audience English, local or Desi audience Hindi. Chidambaram of course made a statement, I don't know, somebody might have seen it on TV, he said that half the speech was in Hindi, half the speech was in English. People who knew English could not understand Hindi, people who knew Hindi did not understand English. The subtitles are so the Hindi was actually plain, and he was also careful to repeat it in English in such a manner that people also got it. So I think it was a very well planned speech, probably had even rehearsed it to my view, it looked so well structured. And it was delivered in a very measured way, where the media was completely clueless as to what he is talking about. So after a point of time, they came to this brilliant conclusion that there are no tax proposals. So they started flashing on the media slides, saying that nothing, no tax rates, no change, complete letdown, blah, blah, all those things were started. Without understanding that, when he started the speech, he said Part A. The moment you say Part A, it means Part B is there. It's a fundamental requirement. So it's unfortunate that media is not able to understand that tax proposals form part of Part B of the budget. It's so sad that we have come to such a state where budget analysis has come to that level. But anyway, we've gone out of the days of Shri Palkiwala. Mr. Bupathy will remember, many of you seniors will remember, where he would come to Chennai and in the university auditorium with just a sheaf of papers in hand, no PPT, nothing, for a massive audience. He will speak standing for 3 hours. Threadbare, vivisecting the entire budget in his own style. Those were real interesting days of skill. So having said that, I think somewhere everybody lost the picture by thinking that nothing is coming. But when Part B came, then they overreacted. So they assumed that basic exemption has gone up. See, only professionals like us know the difference between exemption and rebate. Okay, we are trained to do that. And I don't think Finance Minister made a mistake in the speech. He very clearly said rebate. He never used the word exemption. Media understood it to be exemption and jumped the gun and 2.5 lakhs to 5 lakhs. I got a couple of calls from TV channels saying that, sir, what was promised in the parliament is different and what is the print is different. I said both are the same. There's no difference. Then they didn't want to talk to me anymore because if I'm saying both are the same, why would they want to talk to me? So there were a lot of interesting questions that came up. But I would like to touch upon some aspects of the budget which were completely lost. Either because of the fact that today we are living in a world where we assume that everything is wrong with India. We don't want to take pride of our own country. We don't want to take pride of our own achievements. There are a couple of points which he made out. For example, somewhere he mentioned that we have become the 6th largest economy. Nobody picked up that. Somewhere he mentioned about the fact that we have completely got rid of unmanned railway crossings. Every year, every finance minister promises money to mechanize these, but so far nobody has said that we have got rid of completely unmanned railway crossings.
Broad gauge.
And broad gauge. India is the 2nd largest in startups. Can you imagine that? We are 2nd largest in startups. I am not that old to give advice or suggestions. Sir is much more senior, therefore he could give that advice. But as a colleague, as a professional, as a brother, I can share you something. If India is the 2nd largest in startups, our client profiles will no longer be the same. Our client profiles will be completely different. If your client profiles are completely different and the businesses are completely different, if you are still somewhere stuck in the old thought process of business, you will be lost. So as the business grows, as new technology grows, as new ideas come up and new business come up, professionals are equally required to probably be ahead to give them that advice. It is, first of all, you have to tell him what kind of advice he needs. Gone are the days when the client is an expert and has got 5 questions to come and ask. You have to tell him what are the possible 5 questions he might have in his business. That is the kind of level at which we have to grow, for which there is tremendous amount of knowledge gathering that has to be done. Which is what Sir also mentioned, and it is absolutely vital that we understand this. And vision. You are talking about 2030. There was no necessity to talk about 2030. 2030 means you are planning for a country ahead. So this is what you would like your country to be, and for that you have to take some steps. So I think somewhere we should draw some parallels and try to improve. One more brilliant observation made saying that India is the only country now in the whole world which is the fastest in road highway development per day. Imagine that. We always been cribbing that there are no roads, no infrastructure, no roads, no work is done, etc. 27 kilometers per day when we are constructing, and we are now come to the number 1 in the world. I think somewhere we should also pat ourselves and feel proud that we have come to some levels. Installed solar capacity has gone up by 10 times. That's massive. Mobile data consumption has gone up 50 times in the last year on a monthly calculation. Of course, we can partly blame it to WhatsApp. We had multiple WhatsApp sharing. Today it has started already. Somebody sent 33 items of budget proposals or budget changes, which basically was a summary of all the statements he made, which was last 5-year, 4-year budgets also. So, but then people started talking about it, saying fantastic, fantastic, already done, but still credit goes, so credit taken. Now coming to some of the sectoral points which he touched about with reference to agriculture. Pradhan Mantri Kisan Saman Nidhi. Not Rajiv Gandhi Yojana, Priyanka Yojana, Rahul Gandhi Yojana, Nehru Yojana, Indira Gandhi Yojana, gone are those days. Today it is called Prime Minister's Scheme. Whoever comes later, if somebody is the Prime Minister, it will still be the Prime Minister's Scheme. I think somewhere that responsibility and that clarity is really laudable. Everywhere, even the last 5 budgets we have seen, any of the schemes are either called as Prime Minister schemes or somebody, very, from a freedom fighter perspective, not, to ensure that airports are called in your name, stations are called in your name, toilets are named in your name, those things are. The Koila Mana Ubayam the Potu, the Sami Padame, full of Ubayam, that kind of thing.
Light area.
Light area. So agriculture, of course, everybody said that there is a targeted objective. I would say this is better than a loan waiver. The choice was clear. Something had to be done to farmers. Obviously, the easiest thing would have been to emulate the state example and say, I will waive loans. Now, if you waive loans, what happens? The biggest concern which people are saying is that the credit happening, the credit pattern, the repayment pattern is getting lost because people are believing that somewhere it will be paid. So subvention, prompt payment and income are much better SOPs than to say that I would waive. So I would probably say that this is a actually thought out strategy, much more better and well structured. And I would think that para 87 of the budget is probably something which all of us should be happy about and cherish. And I would read that paragraph. On behalf of all the people of India and our government, I would first like to thank all our taxpayers for their valuable contribution to nation building and for providing a better life to the poor and marginalized sections of society. Your tax helps provide dignity, your tax pays for electricity connections, tax provides for healthcare to 50 crore brothers, etc. You ensure so many things. I've been filing my returns from 1995, paying tax from 1995. Not a single finance minister has ever in his budget speech recorded a word of thanks. So I think somewhere he is connected. That particular para itself is a big connection because all the people, what is it? I've been paying all these taxes for so many years. Somewhere some acknowledgement is what most of the middle class and upper middle class are looking for, and somewhere they got it. It doesn't translate to great relief, but you know, somewhere some succor is nearly provided. And that I think is a very, very thought out paragraph. All the benefits which Sir talked about in terms of Section 54 amendment or in terms of the of course, he says that you may have one house here, one house there. He also talks about 54 exemption, one more house. I don't know what message he's communicating. his thought process was different. Interpretation of statutes always are different. Anyway, but the point is, he's quite clear that he's focused, very focused on these aspects. Unorganized workers, nobody has thought about these things. Who would have thought about this garbage cleaner or a BD worker talking about a pension? You know, it makes a huge difference in their lives. So I think when overall you look at the budget, while it is clear that it is an interim budget, this is what you can do. Within their parameters, they've done something phenomenal in terms of planning and in terms of keeping the whole thing within the box and not leaking out of all these things earlier. But then, of course, the expectations are always high. We believe the best has to come in every budget, but we always also have to live with the reality. And Sir's point is also well taken that you can't raise the exemption and eliminate taxpayers. It's a very critical point because our ease of doing business, we have gone up in ranks, our developed country status, we have gone up in ranks only because of our tax filings and tax returns that are going up. So as far as the tax proposals are concerned, not much has been done very cleverly and very, in a subtle manner they said that sectors I'm touching are not going to be significant enough for me to look at a bigger budget. So individual senior citizen salary, etc. So people will get happy. Now, he also mentioned a lot about GST. He said that how GST has been a great reform and how things have moved and all that. And January was lucky, they touched about 100,000 crores in GST. Nowadays, indirect tax proposals are irrelevant in GST because if you touch customs, if you touch some element of customs and some element of excise duty on petroleum products only, you will have an element in the finance bill. But then you don't need a finance bill for indirect tax anymore because every week we are making amendments in GST. So it is also important that we should probably, along with the budget, structure a GST program also in the future just to give a consolidated view of things that have happened. Given the fact that we have abundance of time, I'll take about 5 minutes to talk about some changes that have happened in GST because all those amendments are effective from February 1st. See, what happened was, major amendments happened in the GST through CGST Amendment Act in 2018. But the provisions were not notified. The provisions got notified only day before yesterday, whereby the effective date is February 1st, 2019. I have done a reasonable analysis. At least 12 states are yet to pass legislation on the SGST Amendment Act, and at least 10 states are yet to notify the effective date. So it's going to be very interesting in future. You have section 7 of the CGST Act getting amended, but 7 of the SGST Act is yet to be amended. Got my point? So you're talking about section 16 of the CGST Act getting amended, but section 16 of some other state act is not getting amended. Future, amending GST through legislation is going to be a challenge because you want the center to amend it and 29 states to amend it, and all the dates have to coincide in one particular day. That is why this took such a long time. and still it has not happened. I will touch upon 2 or 3 major amendments and then close for the evening. One major amendment is that we are now recast the entire section 7. Earlier, 7 was clumsily drafted, whereby one of the clauses referred to the activities set out in Schedule 2. To give a classic example, there is this one amazing clause. It says that tolerating an act, bearing with something, doing an act, forbearance, all that was identified as one activity in Schedule 2. Now anything in Schedule 2 was construed to be a supply by earlier language. Now what they have done, they have recast in such a manner that 7.1 is now confined to 3 segments and Schedule 2 is now nothing but a classification platform. Whether intended or not, the deeming power which was earlier there in clause 4 and Schedule 2 is lost. Therefore, now I can always take a position saying, I must fit into 7.1 first. If it is a supply under 7.1, I will go to Schedule 2 and see whether it is a supply of goods or supply of services. You cannot come to 7.1 from Schedule 2, you must come from 7.1 to Schedule 2. Which means even construction cannot be taxed. They kind of tied themselves up. It is very difficult to extricate from that. Therefore, litigation is likely in that arena straight away in terms of what is the scope of 7.1 Schedule 2. Second, imagine a situation like this. I am sitting in Chennai. I place a purchase order on a vendor in Gujarat and ask the Gujarat vendor to deliver the goods to Delhi. So he raises an invoice on me, delivers the goods to Delhi. Because I asked him to deliver the goods to Delhi, he applies section 10(1)(b) of the IGST Act and says that, boss, you are the purchaser as far as I am concerned, you are the recipient as far as I am concerned, I will charge you IGST. So bill comes from Gujarat, I get an IGST bill. Goods go to Delhi. I raise a corresponding IGST bill on Delhi. Now the question was, can I claim input tax credit of the IGST charged by the Gujarat vendor? Because the section had an observed clause which says, you must also receive the goods. I have not received the goods. So whether a deemed delivery or a assumed delivery can be assumed, can we presume a delivery in this context because the law creates a deeming fiction and the deeming fiction has to be taken towards logical conclusion? So these questions kept on coming and therefore they amended the act and said, don't worry, it is deemed to be delivered to you. This is a prospective amendment. February 1st. Naturally, 100% show cause will come for the period 1/7/2017 to 31/1/2018. Before the show cause notice comes, removal of difficulty order number 5 will come, which says that this section shall be deemed to be in existence on July 17 itself. That is also possible. Because government is very, very clear. Any problem you tell, immediately will amend. We will do removal of difficulty order. 3 years they can do this drama. Removal of difficulty order, issue after issue, where removal of difficulty order has been taken to such an extent they are rewriting the provisions. So and so clause shall be substituted and shall be deemed to be substituted forever. It is more than parliament. One GO. So that is the level at which we have moved. So we have completely Dharavatified all powers available from the parliament to the executive, and through notifications the entire GST regime is being conducted. Fair enough, let it happen in that way. So that is the second amendment as far as section 16 is concerned. Then there was a lot of talk about the entire input tax credit mechanism changing, whereby supplier has to upload the invoice, you have to see the invoice, you have to accept the invoice. Once you accept the invoice, your input tax credit will flow smoothly, various process. In case something happens, both are liable, jointly several liable, etc. One massive section was created called as 43A. That has not been notified. Why it hasn't been notified? All of you know, system is not ready. System we wait. So system will take some time. In the meantime, they are now going to systemize the direct tax also. Same vendor has been chosen. So we will have to see how it goes. Anyway, the point is, when an amendment is not there, it has got its own consequence. So read what all sections are not there. Nowadays it's, this new technique of Amendment Act. Normally those days when we were students of Bupathy sir, the act would be very simple. It will come into force as soon as the president gives the assent. So we all have to wait for the president's assent, that's all. Then they developed this new trick. After present asset, notification. So you have to wait for one notification. Now they come with a new development saying, some section shall be notified, some section shall be notified later. Whichever section comes, you have to follow. Whichever section comes later, you have to follow later. But and know which section comes first, which section comes later. So there are a couple of sections which have not yet come into force. Like in Companies Act. Companies Act 2013 was, all of us were trained in Companies Act 2013. The skill in Companies Act 2013 was to know which all sections have not come first. Then second round, which all sections came. Then third round, which all sections came. Of course, no point reading the act because the MCA overrides everything else. I think in GST also they can put a last section. One section they can create. Notwithstanding anything contained above, GSTN shall prevail over the entire provisions of the GST Act. Somewhere they can put and authorize whatever they will. So coming to the point, as far as amendments are concerned, there are amendments in the context of section 17 also. What is happening in 17 is that today we are in a position to claim repair and maintenance on motor vehicles, insurance on motor vehicles based on certain interpretations. That interpretation will no longer be valid after February 1st, 2019. They have plugged that loophole very quickly, very effectively. So that amendment has also happened. Massive changes in the CGST rules have happened. One other critical point that is very relevant is that today you are no longer, this business vertical concept is gone. So earlier you had this concept of I have one business vertical, I have another business vertical, I will take 2 GST registration. Gone. Anybody who wants multiple registrations can seek registration and take separate registration. One registration which today people are struggling. Multiple registration. Some tax planning is involved for certain sectors, but not for everybody. So multiple registration you can seek. The law also contemplates how to transfer the input tax credit which you have accumulated. All that is contemplated for in the mechanism as far as this is concerned. Another clever point has come is there is an amendment to the recovery provisions whereby if you are distinct persons, Bangalore is a branch which is a distinct person, Chennai is a branch which is a distinct person. Chennai has got some dues. They can take money from Bangalore also. So now, even though under the old law, distinct person falls under the separate state, etc., doesn't matter. You are all same pan, we can take that money also. So recovery provisions have been kind of widened. IGST Amendments Act, IGST amendment is all very, very important, very, very relevant. Some of them are amendments which are very, very simple but critical. I'll give a simple example. I am sitting in Chennai. I place a purchase order on a supplier in Singapore and ask him to deliver it to Malaysia. So I place a PO on a Singapore party, ask him to deliver it to Malaysia. Since I have placed a PO on the Singapore party, I have to pay him money. Since I have invoiced my Malaysia customer, I will receive money. The question was whether any GST is applicable. Lot of consultants opined saying that this is GST, 75A of the IGST Act, straight away you have to charge GST. I took a view that you have no power to tax this. You have no jurisdiction to tax it. Singapore and Malaysia transaction, how can India tax it? So you have enough precedents to take a view that India does not have the power to tax it. So somewhere they felt that it is better that we put this in the statute. So now they put this by saying that if a supply happens from one fellow in a non-taxable territory to another fellow in another non-taxable territory, if the goods don't touch India, there is no GST. It is neither supply of goods nor supply. That Schedule 3 they have used effectively and put it across. So what was obvious has been stated. Now of course people will then say, sir, now only they have put February 1st only it has come. Therefore, it will have, I cannot extend to the past. Then you have to argue that it's a clarificatory amendment and then try to extend it back. Or sometimes I would take a view. There is this concept in GST where people say that, sir, you have to read the exemption. If your activity falls in the exemption, you are exempted. Otherwise, you are taxable. So government seems to think that if whatever is not there in the exemption, you are liable. Taxability cannot be driven through exemptions. In fact, we go back to 1932, there is a Privy Council case of Shawwalas, where the Privy Council has said, it is in the draftsman's enthusiasm to put something that was obvious. Just because he has put something that was obvious, you cannot read it as, Gita and then say that this is what is there, otherwise it is not there. Therefore, what is written in Schedule 3 is stating the obvious and cannot be given a different color than what we can think of. So these are some of the GST amendments that have happened. Massive changes have happened in the rules. Notifications galore have been issued, and the best way to understand these rules is to probably wait for the fresh version of the rules to come and assume that those are the only rules in existence, rather than trying to compare this and compare that and trying to make an understanding. Thank you for a very patient hearing.
May I request Hemavali Madam to present the mementos to the speakers.
I request past chairman Bima Bhatt sir. I request the past chairman Bima Bhatt sir to come on to the dais and present the mementos. Thank you so much, sir. It was a lovely, lively speech. Morning, we had a live telecast from the Chartered Accountant, Piyush Goyal. Now, we have just saw live speech by Vaitheeswaran, sir. Navarasa Nayagan Sulma, Navarasa Tilagamna Salna, அவர் சந்தோஷப்படுவாரா கை பேசிச்சு புருவம் பேசிச்சு வாய் பேசிச்சு வாயை விட கண்ணு ரொம்ப பேசின மாதிரி இருந்தது it was wonderful, sir. Thank you so much. Thank you.
Thank you.
For the audience.
Thank you, members. Let us rise for national anthem.
शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय जय जय
Jai Hind.